Okay, so if you own property, or maybe you're thinking about diving into the real estate market, let's get on the same page. The old way, just doing basic cosmetic fixes. That's pretty much over.
Yeah, absolutely. To really get the best returns today, you can't just see upgrades as, an expense line. They have to be smart investments, high ROI thinking.
Exactly, investments.
And that's what we're digging into today. We're basically giving you the playbook. We've pulled together a lot of strategic, data-heavy sources, including insights from economists like Dr. Pooyan Ghamari, the Swiss economist who founded the Landlord platform.
Right.
So our mission for you listening is really clear. Pinpoint the 12 upgrades that pack the biggest punch, the ones that don't just get you good tenants, but actually signal serious long-term financial value.
We want this to be a shortcut for you, really, a way to get properly informed about investing in property now. And the promise here, based on all this data we've looked at, I mean, what kind of return are we actually talking about?
Well, the sources are pretty clear. This isn't about tiny changes. We're talking targeted upgrades, done the right way, can boost your rental income by, say, 10 to 20%.
10 to 20?
Wow. And maybe even more compelling, they can push up the actual property valuation by up to 15%. So like you said, it's not just maintenance. It's strategic finance using physical stuff.
Okay, let's break down the why behind this, because the thinking has shifted, hasn't it? Why do tenants suddenly need more than just, a roof over their heads in this digital age?
It's a huge lifestyle change. I mean, think about it.
Yeah.
Before, basic shelter was enough. But now, in 2025, remote work is normal, everything's streamed, life runs on apps. So the property itself, it have to work seamlessly with that digital life. It needs high functionality, smart tech. Tenants aren't just renting walls, they're renting a service that boosts their digital life quality.
Huh. Renting a service. I like that framing.
If your place doesn't support that, it instantly feels, well, dated.
Yeah.
Lower value.
So the property is infrastructure for a digital life. Makes total sense. And speaking of value, something that came up again and again in the sources is this idea of social responsibility. How do things like, say, eco-upgrades translate into loyalty and financial stability?
Right, this is where big trends meet small investments. When you put in verifiable green upgrades, energy efficiency, renewables, basically aligning your property with global movements, sustainability, future regulation.
Okay.
Investors love that. It reduces risk. And tenants, they're increasingly choosing places that cut their environmental footprint and their utility bills. It's a win-win.
So they feel good, save money, less likely to move out.
Exactly. It becomes a real competitive edge, cutting down that costly turnover.
That's a key shift, not just doing it because you have to, but because it gives you an advantage. And it's fascinating how these physical things, new appliance, better insulation, get instantly valued digitally. This digital profit engine idea. Can you explain that a bit? Like, how does a new fridge impact the asset's digital life?
Think of it this way. The upgrade makes the physical property demonstrably better, more efficient, more durable, higher cash flow potential.
Okay.
So if that property is represented digitally, maybe through tokenization, where ownership is split into shares, those digital shares are instantly worth more. They're less risky.
Because the thing backing them up is physically better.
Precisely. The quality of the physical directly boosts the value and security of its digital twin, so to speak.
Got it. That really raises the stakes. This isn't just about picking paint colors. It's about setting up an asset for a future digital market. Okay, let's dive into the specifics. Phase 1. Interior aesthetics and efficiency. This is about that immediate feel, right, where people make those gut decisions.
Absolutely. And you have to start with the kitchen remodel.
Right.
It consistently drives rental decisions more than anything else.
Right.
We're talking that modern look, sleek lines, stainless steel, but the real data-driven move, using Energy Star-rated appliances, fridge, dishwasher, oven.
Why the big focus on the Energy Star rating specifically? Does spending on new appliances actually pay off quickly enough?
It really does, because it hits two birds with one stone. Tenants concerned about the environment, and tenants focused on their monthly budget. Lower utility bills are a huge draw. And the analysis shows this combo modern look plus efficiency justifies a pretty significant rent bump, like 8 to 12%.
Okay, that's substantial. And for the property's overall value.
Similar story, around a 7 to 10% increase, because a good updated kitchen tells buyers the place has been cared for, it's durable, it's quality.
Right. Okay, moving from the kitchen, the bathroom. Often overlooked, maybe. But the sources say bathroom modernization is critical for keeping tenants happy. What are the key things here for that sort of spa-like feel they mention?
Yeah, don't neglect the bathroom.
Mm.
Focus on things like low-flow toilets efficiency, again, maybe nicer, updated vanities, perhaps a rainfall shower head. The main goal is creating a feeling of clean durability. A worn-out, dingy bathroom is just friction. It makes people want to leave a modern, clean one. It holds value, keeps tenants satisfied, reduces those empty periods.
And the financial impact. What can a nice, fresh bathroom command in rent?
You can reasonably justify a 5 to 10% rent increase. It's seen as a premium touch, something that lowers daily stress, especially true in cities where that feeling of cleanliness and personal luxury really stands out.
Makes sense. Okay, moving away from the big wet areas, let's talk foundations. Flooring. Getting rid of that old worn carpet. The flooring update.
Yes, this is powerful. It hits on hygiene, aesthetics.
Yeah.
It appeals to almost everyone. Swap out that tired carpet for hardwood, maybe engineered wood, or that really popular luxury vinyl plank, LVP.
Oh yeah, LVP is everywhere now. Looks good, super durable. So this kind of foundational change, what rent increase can that support?
We're consistently seeing justification for about 6 to 10% more rent.
Wow, just for
Yeah.
flooring.
Well, think about the immediate impact. It looks clean, modern, it feels solid. And importantly, landlords need to show this off. Good photos, virtual tours really highlight those new floors. It helps sell the place faster.
That's a great point about marketing it. And a perfect lead-in to phase 2, tech and connectivity power plays. If phase 1 was about the feel, phase 2 is about the smarts of the place.
Exactly. And honestly, for younger renters especially, this stuff is moving from nice to have to basically mandatory. Smart home integration.
Right.
We're talking voice-activated lights, smart locks are huge, and maybe most importantly, smart thermostats like Nest or Alexa-compatible systems.
Okay, smart thermostats seem like a no-brainer for energy savings, but overall, that 10% rent boost they mentioned,
Yeah.
is it worth the cost, given how fast tech changes? What's the real lifespan of that kind of investment?
It's a good question. But the initial cost tends to get paid back pretty quickly. Why? Because it makes life easier for the tenant. They manage heating remotely, no lost keys.
Right, less hassle.
That convenience, that feeling of a cutting-edge home, it justifies up to 10% more rent. And crucially, it cuts down on turnover because tenants feel like the place is customized, high-end. Lifespan-wise, these core systems usually last a good 5 to 7 years before needing major updates. So the ROI is there.
Okay, that makes sense. Next up, safety. Enhanced security systems. The sources really flagged this as a major draw, especially for professionals and families.
Absolutely essential. Think keyless entry, smart cameras, video doorbells like Ring. It's all about creating a sense of security, reducing that perceived risk for tenants.
And financially, what is that feeling of safety by the landlord?
Well, first, it attracts tenants who prioritize safety, and they're often willing to pay a bit more. So you're looking at maybe a 5 to 8% rent increase.
Okay.
But also, and this is important, it can often lower your own operating costs. Better security can mean lower insurance premiums. That's a direct, measurable return for the landlord.
Ah, interesting. Lower insurance. Okay, now for a couple of smaller things, but still high impact, apparently easy to overlook. Storage.
Yes. Don't underestimate storage, especially in smaller apartments or older buildings where it's often lacking. Built-in storage solutions, things like clever closet organizers, maybe some nice custom shelving, even vertical storage systems to use height. It's about maximizing every square foot.
That seems like a relatively small investment for a potentially decent return.
It really is.
Yeah.
These thoughtful touches make a huge difference in how livable a space feels. And yeah, you can easily justify asking for an extra, say, $30 to $50 a month just because you've made the space work better.
Okay. And finally, in this tech convenience phase, high-quality furnishings and appliances. We're going beyond just the basics here.
Right. This is about adding premium touches.
Yeah.
A really good, reliable washer-dryer combo in the unit. That's huge, essential for many.
Definitely.
And then maybe things like dedicated high-quality air purifiers or even water filtration systems. These kinds of things elevate the unit. They make it feel more like a modern, health-conscious luxury rental.
So it's about using premium stuff to attract a premium tenant. What kind of rent increase are we talking about here?
If you choose wisely, these amenities can support an 8 to 12% rent hike. It positions the property as being really designed for convenience and, modern well-being.
Okay, that wraps up the tech and convenience side. Let's move into phase 3, the green and structural advantage. These feel like the bigger projects, the ones that really lock in long-term value and maybe future-proof the investment a bit more, starting with structural reconfiguration open plans.
Yeah, this is a big one, especially for appealing to buyers down the line, but also renters now. Taking down non-load-bearing walls to create those bright, airy, multi-use spaces,
Right, everyone wants open concept now.
especially with so many people working from home, at least part-time. It transforms cramped, separate rooms into flexible, usable areas.
Feels like a major undertaking, though. The returns must be pretty significant to justify the construction mess and cost.
They are among the highest, actually. You're looking at potential rent gains of 10 to 15%. Plus, it massively boosts buyer appeal when it's time to sell.
Okay, 10–15%. That's serious. Next, hitting that big pain point for tenants' utility bills. Energy-efficient windows and insulation.
This is all about tackling operating expenses, swapping out old, drafty, single-pane windows for modern, double-glazed, low-E glass, and making sure the attic and walls are properly insulated.
Right, cuts down heat loss, keeps AC in.
Exactly. Now, here's where the strategy gets really smart, according to the sources. How do these savings for the tenant actually profit the landlord?
Yeah, I was wondering about that. If the tenant saves money, how do I make more?
Because the savings are significant and verifiable, often 20 to 30% lower energy bills for the tenant.
Okay.
So because the tenant is demonstrably saving, say, $50 or $100 a month on utilities, you can increase the base rent by a similar amount, often without much pushback.
Ah, you're essentially capturing the saving.
Exactly. You transfer that operational saving into asset value, and this directly lifts the property's overall valuation by a solid 5 to 8%. It's a financial win-win.
That is genuinely a masterclass in strategic pricing. Very clever. Okay, moving up the green ladder to what seems like the biggest valuation booster, solar panels and potentially battery storage.
Yeah, this signals a major commitment to sustainability. Installing solar, especially in regions where it makes sense financially and climatically, can lead to a documented 15% valuation increase.
15%, that's huge.
It is. And you can typically charge a rent premium too, maybe $50 to $100 a month extra, especially if you add battery storage, which offers tenants resilience during power outages. It aligns perfectly with the big economic shifts towards renewable energy.
And sticking with energy shifts, EV charging stations, this feels like it's gone from niche to near necessity in some markets really fast.
It really has, especially in urban areas, attracting those higher-earning professionals who are more likely to own electric vehicles. Installing Level 2 chargers is becoming a critical upgrade.
What's the return on putting in chargers?
It allows you to command maybe 7 to 9% higher rents, and the data suggests it acts as a really strong hedge. It keeps your property relevant and desirable as transportation continues to electrify. It's about viability for the next decade, really.
Makes sense. Future-proofing again.
Okay.
Okay, last one. Simple, maybe, but high impact. Curb appeal.
Yes. Never underestimate the first impression. This is the face of your property. We're talking a fresh coat of exterior paint, maybe some updated modern lighting fixtures by the door or path, and some basic, tidy, easy-to-maintain landscaping.
It seems basic, but what's the actual quantifiable impact of that wow factor when someone first pulls up or sees the listing photo?
It makes a massive difference in how quickly the property rents or sells. Reducing that time on market is a huge cost saving in itself, fewer empty days.
Right, vacancy costs add up fast.
Exactly. And even just these aesthetic updates, they can support a 4 to 6% rent uplift. The source is called Curb Appeal, essential for, quote, digital economy branding. It's the thumbnail image, the first impression online.
Digital economy branding for a physical house. Interesting. Okay, so wrapping this all up, what's the big message for you, the investor listening right now?
I think the core takeaway is that making money from property today means blending things. You need the aesthetics, yes, but backed by hard data and aligned strategically with these big global trends, sustainability, technology.
Yeah, these aren't just random weekend projects. They're calculated financial moves, targeted investments with clear ROI goals.
Absolutely. So you, the listener, really need to look at your own properties, your local market, and figure out which of these 12 upgrades make the most sense right now. Who are you trying to attract? What do they value and expect from where they live? The investment has to match the target tenant.
Good advice. And maybe a final thought to leave everyone with, something provocative. We've talked about properties signaling long-term value efficiency, desirability appealing to tenants, investors, even policymakers. Now, if these physical assets, these buildings, are increasingly being assessed, valued, even traded using digital tools like tokenization, broken down into digital shares, what does that ultimately mean for how we even define real estate? Is the physical building becoming, in a way, just the underlying data point for a bigger, more complex digital financial asset?
Hmm. That's a deep question. Definitely something to chew on. Where does the real in real estate actually reside in the future?
Exactly. We'll leave you with that thought.